Welcome back to the financial desk. All eyes remain locked on the fallout from Davos. Wall Street is breathing a collective sigh of relief this morning after President Trump explicitly ruled out the use of military force regarding the Greenland negotiations. That de-escalation has pushed the Dow and S&P 500 into positive territory. However, the mood across the Atlantic is far more cautious. European markets are struggling for direction, weighed down by the lingering threat of new U.S. tariffs that could derail the region's fragile recovery. On the macro front, the IMF released its 2026 World Economic Outlook today. While they are projecting global growth to hold steady at 3.1%, the tone was stark. Officials warned that risks are heavily tilted to the downside, specifically citing the intensifying tariff wars and geopolitical fragmentation as the biggest threats to stability. In corporate earnings, we are seeing a split screen. The energy sector is showing resilience. Halliburton shares surged this morning after beating revenue expectations, proving that oil services demand remains robust. Conversely, the consumer sector took a hit. Kraft Heinz stock is trading lower following reports that Warren Buffett's Berkshire Hathaway may be looking to trim its massive stake in the food giant. Finally, looking at the Fed, inflation is proving stickier than hoped, hovering above that 2% target. As a result, traders are now pricing in a pause on rate cuts for the next few months, which has caused the US dollar to soften slightly against the euro. That's the state of the markets. I'm Emma.